Citibank is one of the largest banks in the United States. They have over $1 trillion in assets and 200 million customers worldwide. That's all fine and good, but that doesn't necessarily mean that they would be a good company to go with if you want to consolidate your credit card debt into a personal loan. We've spent years working in the lending industry, studying companies, consumers, and business practices. We track dozens of lenders and know what the best practices are in the industry. Today, I'm going to walk you through the pros and cons of using Citibank to consolidate your credit card debt. Citibank lends between $2,000 and $30,000 at APRs between 11.49% and 20.49%. We've been tracking Citi loans, and you need to know that their rates rose 1% recently. The average FICO of Citi personal loan borrowers is between 680 and 720, so they lend to people with good credit. If you have fair credit or worse, you could apply, but you might struggle to get approved. Some lenders will allow you to include a co-borrower or a co-applicant that can strengthen your application. This can help you get approved for more money, a lower interest rate, or both. Unfortunately, Citi does not accept co-applicants. If you are carrying a balance on a Citi credit card, you might think it would be a good, convenient thing to use them to consolidate all your other debt. After all, they know you, right? On one hand, that might be true, although many of these big banks have divisions that are so big that they don't actually talk to each other. They would be able to see you making payments on your Citi credit card, but much the same way that any other lender would be able to see that on your credit report. But there's another reason that having a balance on a Citi credit card might actually make a Citi debt consolidation loan a bad fit for you. You can't use a Citi personal loan to consolidate credit cards issued by Citibank. That means that they will not issue payoff checks for these products. Now, you could ask for extra money when you borrow from them. When they deposit the money into your account, you could use it immediately to pay down your Citi credit card balance. That kind of workaround only works if they will lend you enough money and you are diligent enough to follow through. If you do use a personal loan from Citi to consolidate your other debts, they will issue checks to pay off your other loans directly. That's good for a couple of reasons. The first is convenience. It's nice to have the loans taken care of so that you don't have to bother paying them off yourself. The other reason I think it's important is because it means that they understand that the loan is meant to replace your other debts and not just stack on top of them. That should, in theory, make it easier to be approved for a loan with them. One of the best things about a Citi personal loan is that they charge no fees. Many lenders charge an origination fee that comes out of the proceeds of the loan. Citi doesn't. Many lenders charge a late fee that can be a percentage of the late amount or a flat fee. Citi doesn't charge these either. Some lenders also charge a failed payment fee, which hits you if they try to take your payment out of your account, but there's not enough money. Citi doesn't charge those either. The entire cost of the loan will be wrapped up into their APR. That's great news. Citi does offer a couple of APR discounts that you can qualify for. They will give you a 0.5% APR discount if you sign up for autopay on your monthly bill. Even if they didn't offer you a discount, signing up for autopay is always a good idea. It makes it much less likely to be late on a payment. On-time payments is the most important factor to building and maintaining a good credit score. But keep in mind that to be eligible for the discount, you need to sign up for autopay when you accept the loan. That discount will not be available for you if you sign up for autopay after the loan has already funded. My recommendation is to sign up for the discount, especially because Citi doesn't charge a failed payment fee. Later, if you find that you are unable to manage your bank balances well enough to avoid overdraft charges with your bank, you could cancel Citi's ACH authorization and make the payments manually. The second discount that Citi offers on their personal loans is probably meaningless to most people applying for their personal loans. Citi Gold and Citi Priority customers receive a 0.25% discount on their APR. That sounds great, but Citi Gold and Citi Priority are status levels based on minimum balances in their Citi accounts. I can't imagine why you would be seeking a credit card consolidation loan for less than $30,000 if you have an average daily balance in excess of that amount in your Citi accounts. So if you are a Citi Gold or a Citi Priority customer, this could be useful, but it's meaningless for most of the people who will apply. If you are approved, it can take up to 2 business days to have the money deposited in your account. If you have a Citi deposit account, you can get those funds on the same day. There is one thing hidden in Citi's fine print that you should know about. Citi has a curious statement that says that if you default on your loan, they can increase your interest rate by 2%. In the industry, default is traditionally defined as being 90 days behind on a payment. It is not clear whether this would trigger the Citi rate hike or whether they define default as simply missing a payment. So you will want to be particularly careful about the fine print of what will trigger the Citi rate hike. That change in interest rate can be a big deal. The point of consolidating your debts is to lower the amount of interest you pay so that you can put more of your payment towards principal. That's the key to using debt consolidation to get out of debt faster. My rule of thumb is that you should only consolidate if you're getting an APR that is at least 2 to 3 percentage points below the interest rate you are paying across all of your other debts. If you lose that 2% drop due to a rate hike, it may have made the whole process a waste of time. That's also why it's important that you shop around. Every lender will have a different criteria for determining whether to lend you money, how much to offer, and at what APR. Before accepting a loan, you should really get 2 to 3 offers. That's the best way to be sure you're getting the best deal that you can in your situation. At the Yukon Project, we've tried to make shopping around easy. If you visit our marketplace page, you can apply to any one of our featured lenders. Behind the scenes, we will check your rate with up to 40 other lenders. Our partners use a soft credit check, so applying will not hurt your credit scores. We will show you all of the approved offers so you can pick the one that's right for you. Citi's a pretty good lender. I love their lack of fees and their discount for signing up for autopay. But this doesn't mean that they will offer you the lowest rate. But if they do, they would be a good lender to go with. If you found this video useful, please like it and subscribe to our channel so we can continue to bring you unbiased financial information. Thanks for watching.